This will be the first video in the case study series for the Dormant Volcano setup, so we'll just go through more examples than what we did in the trade management video. And like I said in that, this will be more fast-paced. There's not going to be any PowerPoint slides. The goal here is just to go through some and get through as many as possible, and that way you can have a good idea of all the different kind of variations of how this strategy could potentially come at you. So here in our first example, remember the first thing we want to do, you can look down here and see that the MACD signal line is above 0 at 0.07. So we know that it is a setup that has some potential. Now what kind of setup is it? Well, if we look at our excitement ruler over here, the 50 period simple moving average, you can see it is now going sideways, but previously was going down. So remember that now narrows it down to a dormant setup opposed to active setup. So we have that. Now it's just a matter of looking at the 20 period simple moving average, that blue line. Actually, let me zoom in a little bit. You can see not only is it above the green, but they're both sloping upwards. So from that perspective, acting just how we would want to see them. So all in all, good looking setup here, and one where we can now put up our trigger point. Now the trigger point for this one, I think would be pretty universal. Now again, you could do it here, or you could do it up here, or I guess even technically a little bit up. So point being here is that, you know, from whether it be here or even down there, it doesn't matter. If this volcano is gonna erupt, then it's not gonna matter what level that this resistance is at. Sure, this level here is a little bit riskier because it could break through here and then not be able to get through either of these resistances and then roll back over, and that's just not gonna be a winning trade. But in terms of, you know, a true breakout and a true volcano eruption, you know, neither of these resistances are going to really make a difference. So the point being, don't spend too much time trying to figure out, you know, should I do this one or should I do this one? Just, you know, pick one and kind of go with it. I'm going to split the difference. You know, you could put it there or could put it up there. I'm going to put it right in the middle there at 24. What is that? 25. It looks like. Now, in terms of resistance, or the next profit point, which is a level of resistance, this one is somewhat tricky because you could be thinking, well, geez, I don't know if I want to wait to see if it goes all the way up there. But keep in mind, you know, this is a nice little setup here. You know, we have a gap down, so we have this window that was created. So any sort of breakout, you know, that makes sense from the technical perspective on where the first profit lock location should be. So this will be our entry point. We'll stick with the same colors that we used during the trade management video, and then up here is going to be our area where we want to look for our first initial profit lock. So let's see what happens. We go into stalk mode now. The next day there, you can see, you know, nothing in terms of buying. Signal line remains above 0, so no need to take it off the watch list. And then right here is our entry point. So the trade is initiated, and then our stop loss, is our red line here, this 10 EMA. That's at 22.39. So again, put in a cushion, 22, you know, 34, 35, somewhere right around there. So we are now into the trade, and we have our profit lock point up here that we want to see get hit. Next period here, nothing really. 10 EMA, continues to move up. Here, nice move, still hasn't hit our profit lock point. Now, if you decided, you know what, I want to, you know, lock in some profits right here, that's fine. I mean, at the end of the day, it's your money, and we have a problem if we're sitting here discussing or arguing about profits. I mean, it's a profit. So if you're locking in those, then, you know, things are going your way and things are, you know, doing just fine. But for this example's sake, you can see there, not quite there. The 10 EMA is almost at our entry point. So in terms of our stop loss, we are now almost at, you know, worst case scenario, just a break-even type trade. There was kind of a little teaser period, you know, didn't quite hit it, but it's hanging up there. But the good thing about this period was now our stop loss is up above our entry point. And then right here is where we get filled for that first portion. Now the update that needs to be made is we need to find the second profit lock point. To me, that would be right up here. You can see acted as support, and then when it failed, acted as resistance right there. So this level is at 28.23. Let's see if that can get hit. So remember, now a portion of our shares have been sold. Next period right there, hasn't quite hit it. Right there did hit it. So we would be out the majority of our shares. Going back to the last video, for me, I'm just going to say at this point I have 25 shares left. So out of 100 shares, I would have 25. So 25% or a fourth of my position, however you want to look at that from a mathematical standpoint. But point being, I have 25% of the shares left at this point. And it's been a very good trade so far. There, it's starting to pull back. 10 EMA continues to creep upwards. Keeps on creeping upwards. Now it's starting to go sideways. Sideways, we're still in, as you can see. Keep creeping upwards. Still in. And then right there, we would have been stopped out. So just to recap, entered in down here. Got our first profit lock point right here. Got our second one right here. And then we would have been stopped out just right up here. So all in all, very nice trade and a good example of a stock that's coming out of the hope and then moving into the excitement phase. In our next example here, step one, look down here. Okay, our MACD signal line is above zero at 0.29. What is our excitement gauge doing? We got to figure out if this is a dormant or active. Well, you can see here the overall flow to the 50-day simple moving average is down, so the excitement ruler is telling us that this is a dormant setup. Now, how is the 20 SMA doing? Well, we have one where you kind of got we have a speculative bullish, meaning you can tell that the 20 will be crossing up above the 50. You know, if we zoom in here, you can see that, you know, they are on a crash course. 50 is essentially going sideways. However, the 20 has a nice upward slope to it, which means they will be intersecting one another. So this is worth, you know, putting on the radar. And when we put it on the radar, we now need to have some sort of trigger point. So trigger point for this one, be right about here. You can see this group actually acted as a low and then highs and then high once again. So this would be our trigger point at 74.69. And then our profit lock point, let's figure that one out. As the video said, we want it to be relatively short-term resistance so we can ensure some locking in of the profits. So with that being the case, you know, you could put it right up here as the initial point. Hopefully back here you can see why that would make sense. And now we just grab that popcorn and see if we get any sort of upwards movement. So next day there, you can see green day didn't get any breaks, still above zero, so it remains on the watch list. Here, same thing, red day didn't get any break, but remains above zero, so still on the watch list. This period here, again, so you can see this one's taking a little bit of patience, got to wait a little bit, and then right there, this move happens, and this is one where within this period, not only does the trade get initiated, but it also goes all the way up there and hits our first profit lock point. So this is a pretty productive period, meaning, you know, initiated, get in, and then it hits our first profit lock point. So now that we have that, and on that note, getting in, we'd also have our stop loss right there at the 10. So our next profit lock point, I'd put right up around here. You can see twice in a row there and there acted as resistance. So this would be our second profit lock area. So let's see what happens the next period. Goes sideways and then right there out. So this is an example where I wanted to put in there. It wasn't a loser because, you know, we still did have get shares, but this is one where, you know, they're all not going to just skyrocket up. Sometimes you're just going to have these little quick moves and then it's going to be back up. So this is why I personally always like to take half my position off the table up here. That way, if that happens, you know, I've at least locked in profits of half my position, you know, up at this portion of the chart. Now, obviously, when in that first example where the price kept going up and up, you know, when I've sold half my shares early on, you know, I wouldn't have made as much money later on, you know, within the chart as the move continued. But then you look at this chart, and it looks like I did a smart move by selling half up here. So it's give and take. It's whatever makes you feel most comfortable. But I wanted to get charts like this in here. Just I don't want it to be misleading and think that, you know, every single you know, volcano eruption and breakouts gonna produce some massive gain. You know, this is the point of profit lock points. We want to have areas in there so we can lock in profits and take advantage of any sort of upwards moves, because there's always moves like this, you know, that could be waiting right around the corner. All right, in our next example, first thing first, see down here, MACD signal line is above zero. Looking at our excitement gauge, it does have a downtrend to it, so now we know that we're looking at a dormant in terms of the 20, you can see it is up above the 50. So it's just a bullish setup, not bullish speculative or anything like that. Now with this example, I want to start to bring something else in. Remember how I've been really trying to just drive home the point that with the stop losses, you can wiggle around and try to maybe make something your own. I want to start to use another example that you could do. Now I'm not saying, I personally don't do this, but if you do, or if you are looking for another way, I want to start to kind of compare how the two different areas, or two different, I should say, moving averages could be used as stop losses, and therefore, kind of you'll see the pros and cons. So if you're somebody that's maybe more of a longer term swing trader and doesn't want to be checking in really even every single day, then what you could use is also the 20 SMA as your stop loss, which is this blue line here. So we'll see how that goes, and I'm going to start to follow that through the rest of the video, just because I'll be honest, as I started to prep this one, I thought, I keep talking about you can experiment and bend the rules a little bit with stop losses, but then I really aren't giving any sort of examples of something that you could do. So I'm going to do the 20 the rest of the way through, and that way you can kind of get an idea of how two different moving averages would work as stop losses. So anyways, let's get back on point here, 20 above here. So now if there is a break, well, I'm getting ahead of myself. First thing is first, let's map out our our trade initiation point, which is our trigger point. So for this one, I think it's pretty straightforward. You can see here, that's where the profit taker stepped in on this move here. So if it can get back above here, that would be the initiation point. From there, the next area of the first profit point would be right up here at this area. You can see, hopefully that's a pretty evident area of resistance that would make sense for a profit lock point. So now let's see what happens. Next period there, price drops down, but no problem. Still above zero. So again, another one that is taking some patience. Starts to creep back up. And then right there is the entry point. You can see comes up right there. So you're now in the trade. Now, looking at the stop loss, you're thinking, are you crazy? I'd rather have my stop loss be right here than all the way down there. Well, yeah, at the beginning, sure, you are risking much more if you're using the 20 SMA as your stop loss. But as examples will show, it's also going to keep you in the trade a lot more and help you be able to hit bigger home runs. So as is the case with anything in life, there's always pros and cons. There's always trade-offs. So the one trade-off here is, you're having a much tighter risk. You're risking a lot less with the 10 EMA versus the 20 SMA down here. But at the same time, as you'll see, that might work in your favor. So let's just see what happens continuing going forward. Next period there, you can see it goes up and hits our first trigger point. So the next the next trigger point, let's see. That would probably be a little bit too tight. You can see right there and there. So let's put it up in this area here as the next trigger point. Or not trigger point, excuse me, profit lock point. Sideways. So now here you can see 10 EMA is at the entry point. So worst case is, you're breaking even on the remainder of your shares if you get stopped out. Whereas the 20 is still down here, and it could technically drop all the way down there if you honored it and were a ninja like you should. If that's what you said you want to honor, then yeah, you're still risking quite a bit more. So just keep that in mind, the pros and cons of each right there. And then on this period, you can see it shoots up and hits our second profit lock point. So now, if it were me, then I'd have 1/4 of my position left, and we're in the kind of let it ride phase and see if we can hit a home run here. So you can see there, still in with the 10, and now the 20 is just now reaching our entry point. So now even with the 20, finally it is up here at this point where it would be a break even. You can see here, this is why you want that cushion. So here, 10 EMA people are out. You are now out of the trade, and moving on to the next one. Let's see how the 20 SMA people do. So right there is the benefit of the 20 SMA. Held you in, and you would have been stopped out right here, but the point being, if it's me and I'm holding for this gap right here, that's pretty much like the ball flying over the fence. I'm probably If I had 25 shares left, I'm selling at least 15 of them up here, and then I'll let the remaining 10% of my position ride. But when you get a gap up like this, and then you get like a spike, this is a big move, and this is a move that the 10 EMA stop loss people would have been out on. So again, I use the EMA, so I would have been out here. But had I been using the 20, it would have been a very nice score. And for the longer term swing traders, this is the power right there of the 20 SMA. For our next example, again, MACD signal line is up above 0 down there. Looking at the excitement gauge, you can see it was going sideways and then is now going down. So if we were to scrunch up the chart some more, you can see, okay, so the overall flow is still down. So we are dealing with a dormant setup here. And then when we look at the 20 with the 50, this is one where I would probably stop right here. The reason being, yeah, I guess they're on a crash course, but I mean, there's still a big space between here, and that's just a pretty big space. I prefer if they're a little bit closer, like in this little area right here, you could tell right before they cross. So this is still pretty big. Now you could still put it on there on your watch list if you said this was a crash, or if you said this was on a crash course. So we're gonna go with this and just to show that it's kind of subjective here. And again, when all else fails, if you don't feel comfortable, just move on. But let's say, all right, this is on a crash course. This is going up, this is going down, but this distance here, that doesn't bother you. So you still want to, give it a try. So first thing is first, you'd put your trigger point. And for this, let's see, looks like a pretty obvious point to me. Right around there, you can see it was the top of here, and then resistance over here. So that's where your trigger point's going to be. And then our profit lock point, let's get that one figured out. Now with this one, I want to use this as an example. This pink line up here you see is the 200-day simple moving average, and the reason it's skinnier than the other lines is because it doesn't have anything to do with the strategy per se. However, I believe that all traders should always have the 200 period on their charts. So with this one, and this is the reason why, this is sloping down. So this would be the first profit lock point. Right now it's valued at 91.27. So this is where I would be looking to have that first profit lock point being the 200 period simple moving average. If you've been through robotic trading or just general chart knowledge, that's always a key level of resistance. So that makes total sense to have as a profit lock point. So that's where that would be. We'll just leave this line up here for right now, and when we need it, I'll bring it back down. So let's start to go through things and see how everything turns out. So the next period there, it drops, still above 0. Now at this point, if I were doing my scans again and it popped back up, now I'd start to feel more comfortable. You can see the space has closed down some. It's pretty evident now there's a very strong upwards move to this, and with the 50 still kind of sloping downwards a little bit, you can see this is getting closer to probably being an area where it's going to cross over. So right there is the initiation. So again, looking at our stop losses, 10 EMA tight, more wiggle room down here with the 20, and then our first profit lock point up there at 91.13. Keep in mind this is a moving average, so like our stop losses, this is also going to be changing as each period changes. So you can see there, still haven't been hit. Drop down there, so you can see close but no cigar. And then right there, 10 EMA people out. And then you can see this is one where everything just pretty much came apart and went down. So this was just a flat out loser, and I wanted to show this one as just kind of add some spice. In the previous lessons I've always done, there has never been really a loser within the winners. So I just want to keep things realistic and show that sure things. If the way I look at it like this, if there's a bunch of winners, I think it can put people in the mindset of, oh, this strategy is flawless and it's unbeatable, and there's just no such thing. So I wanted to sprinkle a few of these in here, and this one right here to show, yeah, initiated, and then it just didn't work out. That move there came back to life, but in terms of the overall chart, it just didn't work out, and sometimes that's what happens. You can see this ended up actually being a nice move upwards, but this little pullback here would have knocked out both the 10 EMA people and the 20. The 20 would have taken a bigger hit than the 8. However, as we go through more case studies, you'll see sometimes the 20, they're going to have a much bigger winner than what the 10 EMA people would have had. And it was one of those things where the profit lock point didn't even get hit at all. So it was one where it was just a straight up loser, just didn't work out. But that's what comes with the territory of trading. Key thing is, though, we kept our losses small, and as we'll see, when you hit the big ones, they can really wipe away these sorts of ones that just kind of roll over on you. So now in this example, first thing you can see MACD above 0, flirted with going below 0, and then came back up above, came back down, and then right here almost went back below. But you know what? I'm not sure why I'm pointing that out, because even if it did go back below, who would care? Because as long as it's positive, then it's in play. So I guess it doesn't really matter at that point. Had it gone negative, it at the time when we care about it, it's positive. So that's what matters to us. And then you can see 50 overall flow. So we know we're dealing with the dormant. And then when we look at our 20, you can see well above the 50, and in fact the 50 is actually starting to curl up a little bit, which would make sense. But this is one where this is why you always want to make sure the MACD is above 0. Here it crossed up above 0, and then it just head faked and went back down. So this is why you have the safety precaution of needing this above 0. This one has a lot of kind of whiplash action, so you want to be extra careful with it. But at the end of the day, the move really hasn't happened. It's just been trading back and forth. So if anything, we kind of have a longer term channel here. So on that note, let's get the trigger point mapped out. And really, I should note, if this sort of, all these big movements and falling apart, if this sort of move here freaks you out, then just move on. I mean, I could see that, thinking, well, geez, this one has a history of making big moves and then falling apart. Big move, falling apart. Big move, falling apart. If you notice that and that scares you away, then just move on. I mean, that's a totally logical reason, and I wouldn't, blame you at all. I mean, that makes sense to me. So, if you see that sort of price action, that's why general chart knowledge is so important. I mean, because when you see that sort of stuff, you can make your own decisions, and that's fine. But I did want to show you that even with this sort of whiplash action, that if you still follow the procedures, it can still set up for a nice little trade. So for this one, I would hope it's relatively straightforward. If not, you might want to go back and brush up on some of your resistance identification. But you could either go right here or up here. I'm just going to go right there. I mean, it's already started to move. You can see that this area here. But also the reason I'm putting it right there is because of this whiplash action. I would be pretty aggressive with that first profit point. So I'll show what I mean. So for my first profit lock point, I'd put it right there. I know that's not very far away, but like I said, the previous history and the whiplashing, I'd want it right up here at this previous point. So the profit or the trigger point would be 861, and then my first profit lock point would be up there at 868. So I'd be going for a quick little 7 cents there, just in case this thing all of a sudden decides it wants to peter out on me. So let's see how that unfolds. Next period there, you can see would give entry. And then right there would be the potential. Let's see, how high did it actually go on there? 868, and I wanted to get out at 868. So point being, whether or not you would have gotten out there on this candle here, this is why you just cut the that previous example. I'll confess, that was put strategically in the lesson because yes, with a loss, this is what could always be right around the corner. Just a big gainer here. So this is one where, step 12, which is optional. I mean, if you see this sort of action and it's just ripping and roaring, and maybe your second profit lock point was up here, which would make total sense, you could totally back off. Now, if you're not sure and can't tell, then just take profits right there. Because remember, if you're following the system, you're still going to have shares left, even for the remainder of this move here. But, if you do have your profit lock point up here and you notice this action and it's just coming, the price just seems to be moving like a tidal wave, then yeah, you could back off this. But again, for example's sake, we'll just assume that you did still get out right there. So now you have a portion of your shares still left. And, maybe, again, if it were me and this happened and I had 25 shares left, I'd probably be trying to sell another 15 of them up here. And that way I'll just let the remaining 10% of my position rise. Because, I mean, this right here, this is what I call a home run. This is what we're looking for. And this is why we keep our losses small, because, there can always be something like this. So you can see here, now starting to go sideways. Our 10 EMA is catching up. Another nice move here. So the 10 EMA moving up. You can see the 20 right there. And then right there, another big move up. So this is one now where 10 EMA people, they would have been out and they would have just missed this move here. But 20 EMA people, they are still in the trade. And then actually, they would have been stopped out here. So 10 EMA would have still been better. I actually forgot about that move. So I was planning on making this one example of the 20. But regardless, so yeah, once again, the 10 EMA looks like a smart one to use. That's why I personally use it. And, for this strategy, I guess I'll be honest, I've never really used or back tested the 20, so I'm not sure how well this performs. Maybe it would be better as like a 17 or something. I don't know. I shouldn't speculate on that just because I really don't know, and your guess would be as good as mine. But regardless, you can see came down here, and they would have been stopped out here. However, in the defense of the 20 SMA strategy, they would have had the option to lock in some more shares way up here, whereas the 10 would have never had that option because they would have been here. So, maybe they would have sold another, 10% of their position or something way up here. I don't know. Point being, they were kept in longer and would have had an opportunity at this massive move here. But in the grand scheme of things, the big point I was trying to make was previous example just didn't work out. But by being a ninja and keeping our losses small and disciplined, these sorts of moves could always be right around the corner. Now, I really wish I could say that if you take a loss on the next stock you play with the Volcano strategy is going to be something like this. Unfortunately, that would just be a flat-out lie on my part. But point being, they exist, they happen, and when you keep your losses small, a move like this can wipe away many losses. Okay, for our next example, MACD signal line above 0, good stuff. You can see the excitement gauge was sloping down. It's starting to even off here, so we know we're in a dormant setting. 20, to me, that's a pretty evident crash course. Not much space between them, so for me, I would personally feel comfortable with that, knowing that the 20 is more than likely going to be crossing up above the 50. So our trigger point, I'd put it right up there. That's where kind of the top of this little miniature pattern is taking shape. And the reason I do that would be, again, like the last example, I'd just want to go pretty aggressive with the profit point. So I'd put my first profit lock point right up there. So let's see what happens as we go into step 6 and grab some popcorn. So here it actually gaps up on us. Now, gap up entries, I never covered this in terms of the step number 7 where we enter into the stock. But one way you can play these, and this is how I usually play them, is just use your trigger point as the entry point now. It was the entry point to begin with, and it still is. Now, instead of it being a resistance, it's just simply a level of support. That's just basic technical analysis. So our trigger point right there was at 45.90. So now, if you want to play the gap, fine. But in terms of how do you play the gap, in a straightforward fashion, I would say this is still the level that you want to use, because if it comes down here, that's the typical gap close, and that makes logical sense to try to grab some shares right there. So again, if you want to play it some other way, that's totally on you, but let's see how that would play out. So there you can see, let's see, how low did that drop? It dropped down as low 45.95, and I said our trigger point was 45.90, so therefore our entry point would be 45.90. So this day would have not have been filled. Now, as long as this remains above 0, then we're good to go. So you could leave this on your watch list and say, you know what, I want a piece of this. If this is going to be some sort of volcano that really gets moving, then I want to have this, on my radar, which I would agree with. Just because you can miss an entry here, you can always let it come back and try to pull back to you. And right there, let's see, it went as low as 45.85. So there's your entry point, and you would have been fine there. Now you may be asking, well, an entry point was below the 10 EMA, so where do I put my stop loss? Well, that's just where general chart knowledge comes in at. You'd want to find another area of support, and then put it slightly below that. If you wanted to, you could be using the 20 EM or 20 SMA right now for stop loss. But given we're kind of outside of the bounds a little bit of the strategy because of this gap up, this is why. Let me put it like this: if you're relatively new and are kind of just getting your feet wet with charting, maybe just went through robotic trading course, if a gap up happens, I just move on and not worry about it. Meaning if it gaps up over the trigger point. But if you're advanced, then you should see why all this makes sense. Pulls back here. You have the 20 SMA right here, which could be used as a stop loss. So your risk is very minimal, and then you'd be good to go. And you can see right here, starts to turn around. Now at this point, you could get right back onto the whole 10 EMA thing. The price is well above there, or you could just leave it at the 20. That would be up to you, but that's all, that's general chart knowledge. That's just making the chart work for you. So now let's see what this one happens. So it was a very good gap fill play right there. Came down, amazing. Our entry point, our original trigger point was at 45.90, came right down to 45.85, and now you can see it's working for us. Another gap up there. So I'm just gonna kind of speed things up, to watch the red line and the blue line, so you can see, the two different perspectives on the stop losses. So right there, a good reason why you need to have a cushion. At that period, it was 48.79. This went down as low as 48.71. So maybe, potentially, 10 EMA people stopped out there. If you're one of those people that doesn't use a cushion, then yeah, you for sure just got stopped out right there. But if you do use a cushion, depending on how liberal you are with the cushion, you could still very well be in there. But prime example here of why I'm a personally big believer in stop losses. How frustrating would that be? Comes down here and then moves all the way back up. And then the next day that happens. Oh, that's why I like those cushions, and I'm willing to give up a little bit so I can avoid moves like this. But at the end of the day, the 20, they're still easily in. No question whether or not the 20 SMA stop loss people are in there. You can see it just keeps moving up. And I should note right here, 10 EMA people more than likely would have been out right there, if not right there. But the 20s, they're still in there and still sitting pretty. So I'm going to just speed things up. You can see sitting pretty still. And then right there, they would have been finally stopped out. However, as I've taken or already mentioned, they would have also had the opportunity to lock in some profits up here because they would have still been in the trade. Whereas 10, they would have been out here and never had the opportunity up in that area. So a one where a gap and then a fill. I'm sure we'll come across some more gaps, I believe. If not, I'll maybe try to look for some more before we get into these next case studies. But just example there. And again, to reiterate, if the gap makes you nervous and you're not quite sure how to approach it, then just move on. So I guess that's the best way to put it. If you're not sure what you're supposed to do because of the gap, then just move on. There's no shame in just moving on. It's better to move on than to try to make it up as you go when you don't really know what you're doing. But I did want to put this in here to show that, with general chart knowledge and just basic, understanding of supports, resistances, and stuff like that, this one would have made a very nice play for you. So, but again, if you're unsure, just move on. That's listen to your emotions and listen to your confidence level. If you're not confident in it, just find one that you are. All right, for our final example for this video, we're going to look at one where I want to just first make a point. You may say, well, this is above zero, good, but maybe you're looking at the price action and think, well, geez, it looks like the move is already made. Well, let's just think about basic technical analysis. What we could have here is bull flag, bull pennant, some sort of pattern just taking shape. Yes, a big move has happened. However, the big difference between this big move right here where it shot all the way up and this move here where it shot all the way up is, let's look down here at our MACD signal line. This one still well above zero, so this was just still too risky, and that's what happened. It rolled back over. But now with this big move, you can see it is above zero. So while it's not guaranteed, that's not what I'm trying to say, nothing like that, we are in a little bit better position in terms of, all right, this part was still just straight up early signs of hope, maybe a little bit of surrender, turning into some hope, but then it just rolled back over. Now we're back with hope, but our hope has a little bit stronger, kind of indicators behind it with the MACD signal line being above zero. So again, just want to show, yes, this has made a move, but that's also a way to look at it. It's just a flag pull, but to have confidence in the pattern, unlike the confidence that you could try to have right there, this pattern was being formed under zero. This pattern is now being formed above zero. So, that's why that MACD is step number one, because it's really trying to put us in positions where, we have the best possibility to succeed. Is it guaranteed? Obviously no, but it's just, it's from the psychological perspective, it's putting us in that area where hope is starting to transition into excitement. So, all right, now that I got that little tidbit out of the way, let's so we have our excitement gauge sloping down, so we know it's a dormant. Was going sideways, now going down. Our 20, no speculation needed. The cross is currently happening, so we can move on to mapping out our trigger point. To me, this trigger point's pretty straightforward. If we're looking at this within kind of as a chart pattern, the top of the flag area would be right here. You can see 2 periods in a row, bounced right off it. So it would be right up at this level here, and then we need to put in our initial profit lock point. So given this one's history, I mean, yes, I know the signal line is above 0 now, but knowing that, it just did get done rolling over after making a decent sized move. Granted, we're now above the 50. I'd be, me personally, my risk tolerance, again, that's what it all goes back to. I'd put my initial profit lock point pretty darn close right here. You can see acted as support. So that would be my initial area for a profit lock point. But if that didn't freak you out and you were more comfortable putting it, up in this area here, right around these previous highs, that would totally work too. But for me, like I said, I'd keep it right down here around that area. So let's see what happens. Grab the popcorn. So there, no entry, still above 0, remains on the watch list. And then right here, so perfect. So again, we got another gap up. So I'm going to zoom in here. So you can see the price for this entry point, which I think is pretty evident. Let's see, this high was at 618.35. So 618.35 was where we wanted to. You can see right there, it actually gapped up slightly above it, and then it dropped back as low as 617.50. And again, our entry point would have been 618.35. So we'd have been filled right there. Gapped up above, so that would have turned our resistance into a support. That's basic technical analysis. Hopefully you understand why that's the case. And that would have just entered into our as our entry point. This one would have been easy because with an entry point there, you could have just had the stop loss still at the 8 EM or the 10 EMA. Makes it a little bit easier because the previous example, if multiple days had to go by before you could have gotten in. But this one, on that same day, gapped above, pulled back, would have filled you, and then headed back up and actually hit the first profit lock point. So, in other words, this was a pretty exciting day. So the next profit lock point for me would have just been right up here. Now that, especially with the close up there, it would have made sense. All right, I'd be feeling pretty good that, this next profit lock point's going to get hit. And you can see right there would have been hit. Now I'm just in the phase of holding. Again, I'm not going to, stop for each candle and show, but remember we have 10 EMA stop loss people here, 20 SMA stop loss people here. Let's see how it goes for everybody as we go for the home run. 10 EMA are now at the break-even point in terms of being at the original entry point. Looks like we have to go one more period. 20 SMA people, they are now at the break-even point. Right there, good example. Let me zoom in some of why you need a cushion. You can see drop down, although it didn't quite hit it, pretty darn close. And this is why the last thing you would ever want is to get stopped out right there, and then just to see this move start to happen to you. So you can see still moving up, and right here, this is where the stock has now gone into an active volcano. It's above 0. Our 50 is now sloping up. So we've caught a dormant volcano transitioning into an active, and that's really our ultimate goal. That's where the home runs are hit. Not going to happen every time, but this is an example where things are working out. They're potentially stopped out. That's going to be one where if you don't use a cushion at all, you're out. And then given that's going to depend on how liberal you are with your cushion, whether or not you're stopped out there. So you can see there would still be in. And then right here, no doubt, 10 EMA people are out. 20 would still be in. You can see they're still hanging in there. And then right there, they would have been stopped out. So EMA up here, 20 would have been, or 20 would have gotten a little bit more of an opportunity. both from being stopped out, they would have made more, and then they would have also had the opportunity up here to lock in some more profits, whereas 10 would have been out down here before this move up even happened. But again, this is one of these where you're going to have losses, but every once in a while you're going to catch one of these. Not every single time, probably not even 50% of the time. If I'm being honest, I mean, but when you do catch them, you're gonna be able to wipe away many losses as long as they're small. So that's the first batch of examples I wanted to go through. We'll have some more case studies, and we'll just keep punching out these examples.